Success at a wine auction starts long before the bidding begins. Serious investors treat the catalog like a financial prospectus, screening for provenance, condition, critic scores, and market data. The critical step, set your all-in max bid before the auction. Include the hammer price, buyer's premium, and taxes. Write that number down and stick to it. During bidding, ignore the theatrics. Jump bids can clear the field fast, but late bids can backfire online. Use absentee bids to avoid emotional overspending. If the same wine appears in multiple lots, wait and observe. Let the early lots reveal market appetite. Never forget, the hammer price isn't the final cost. Disciplined bidding protects your capital and ensures you're buying an appreciating asset, not overpaying for a label. Auctions aren't about outbidding others. They're about executing a strategy you defined well in advance.
Nick, for those of us who have never been or participated in a wine auction, tell us what it looks and feels like.
Well, so Andy, I think it's worth saying that there are two types of auction essentially, and since COVID, about 2/3 of the auctions that Sotheby's run are online, and so taking part in those is a very different experience to being live in the room. But when I say 2/3, that's approximately 40 of the 60 auctions that we run around the world. So there are still plenty of live auctions for people to take part. But I think the principles are the same. If you're going to take part in an auction, it makes a lot of sense to do the research ahead, identify the lots you're interested in. But I must say that there are a few things that can come close to the experience of being in a live auction, particularly those larger auctions. And we're privileged and honored to conduct both the Hospice de Beaune auction, which is the largest charity auction, which takes place in Burgundy this month in November, normally the second weekend. And there are as many as 1,000 people in the room or across two rooms bidding, but also the Napa Valley auctions and the Premier Napa Valley auction, which happens in February in Napa, which Amanda will know well, can have as many as 400 people in the room. And both of them, but Napa and Hospice, are a wonderful combination between, I would say, the precision of an art auction and something a bit closer to a cattle auction in terms of the rowdiness and the noise and the excitement. And they are a lot of fun. And the idea is to energize the room and to get people fully engaged. And that happens. And it's a wonderful experience to be in.
How have bidder demographics evolved since Sotheby's expanded online?
So it's very interesting. We've acquired a much younger demographic than we'd previously had. The under 30s have engaged a lot more, but we've also noticed that there's been a shift in terms of geography, because traditionally our key areas have been London, Paris, Geneva, and then New York in the States, and Hong Kong for Asia. What online bidding has allowed is it's unlocked opportunities for people sitting at home. And so we found that markets that perhaps haven't been as engaged in the past have really engaged. We've seen Central America involved. We've seen other parts of Asia, particularly coming in. And of course, within the United States, the opportunity for people to be bidding, even if they can't get themselves to the East Coast. And so it's substantially improved the engagement that we've had. And I'd also say for anyone who's ever taken part in an auction online, the speed at which auctions transact now and the lack of latency, you can bid online and it's as effective as if you were in the room. You don't have the same atmosphere, but your ability to engage at speed. And as auctioneers are trained, they're always trained before they bring the hammer down to look up to check that normally the last bid to come in is an internet bid. So they're always there looking out for it. And so you can really become fully involved bidding on the internet, but there's nothing like the experience of being in the room.
Robbie, tell us a little bit about Liv-ex.
Yeah, so we operate the kind of global exchange for the fine wine market. So much like the New York Stock Exchange is or the London Stock Exchange operates for stockbrokers, we operate for fine wine merchants. So we've got members from across the world, in the US, in Europe, in the UK, and Asia. who all access Liv-ex in order to not only get access to the data in order to make trading decisions, but also the ability to actually transact. So we supply real-time independent transaction data. So wine businesses, some of whom might be in the room, can make informed trading decisions, and obviously then if they seek to transact with Liv-ex, we support that trade and actually physically move the cases between the two different businesses from all over the world.
Are you able to capture auction data?
Yes, yeah. So we capture auction data. We receive auction data from auction houses across the world, so we can benchmark auction data against transaction data that's occurring on Liv-ex and against inventory stock lists that are published all over the world. So we can give a wine merchant, much like I guess in financial terms, access to their Bloomberg terminal. To see exactly what's going on any given wine. And we've been doing that for the past 25 years.
That's interesting that you bring up Bloomberg terminal. I'm assuming that Callum is familiar with Bloomberg terminals with your background at JP Morgan. Can you talk about WineFi and maybe the impact of when you integrate auction data into investment decisions on your platform?
Yeah, absolutely. So just as a brief background to your listeners, WineFi is an investment platform for investing, specifically investing rather than collecting or drinking fine wine. Really, when we founded the business, we set out with two core objectives. One, how could we lower the barriers of entry to building a diversified wine portfolio? And we have sought to achieve that through a syndicate structure, which works a lot like a property syndicate or an angel syndicate. But also we wanted to apply the rigor of quantitative analysis that you would see in the traditional the traditional financial markets, too used to saying fine wine, to this really fascinating asset class. And we do call it an asset class because it does have the characteristics of one. Ultimately, there are wines that appreciate and depreciate in price. They're subject to market forces. There are a variety of factors that influence fine wine. And speaking about auction data, that's absolutely a really important data point. But wine is unique amongst what we more broadly call collectibles, by which I mean classic cars, watches, whiskey, anything of that ilk. In that, thanks to the Liv-ex and others, there are 25 years plus worth of real-time trading data that allow us and others to backtest investment models in a way that simply is not possible in other asset classes. And auction data is an important thing that we factor in when we are looking at factors that have influenced the price performance of a wine over time. It's sort of up-to-date trading data, but it is one of several price indicators that we would look at, I suppose, when making investment decisions. Interesting.
So do you think that wine is a more efficient market than some of those other collectibles?
So I do, and anyone on this call, please feel free to disagree with me, because the wine trade often beats itself up as to just how inefficient the market is. But I do think compared to art, compared to whiskey, compared to watches, just to use those examples, there is a greater degree of price discovery thanks to businesses like the Liv-ex, to be honest, amongst others, than exists in those asset classes. And one, that's a longevity thing. Two, it's because of the existence of real-time transaction data, not just list prices. It's the thing that matters ultimately is not what the wine is listed for sale for, but what it actually transacts for. In the same way that if you're investing in property and you list your house for sale and you get an offer 10% below your asking price, that is the offer that matters if you accept it. The actual trade price rather than that initial list price. And I do think, and Robbie and Nick will tell me if I'm wrong here, but I do think, sorry, and Amanda, but I do think that is unique amongst collectibles in just the amount of data that exists around fine wine.
Amanda, what's your experience with auctions?
Well, back when I was the wine director at Press in Napa Valley, we used to utilize auctions a lot. And I think coming from a non-wine drinking household, auctions were brand new territory, and I had no idea what I was getting into when I walked into my very first live auction, which was a mistake, as as Nick pointed out earlier, it's an exciting atmosphere. I sort of liken it to, being at a sporting event versus watching it at home. Both are really, really fun, but you do get sucked in a lot more because, there's energy there. Often there's something very fun to drink there. And so you find yourself getting sucked in and perhaps overbidding when you shouldn't. I also found that not having a plan and putting that on a sheet of paper or even better in a spreadsheet, that is something that you should definitely be doing if you're thinking about not just bidding on one or two things, but many different lots, which you should have many different options. But I've found that building in formulas where you can see what that end hammer price is going to be is crucial whether you're doing that in person or online. But it is very fun, and I do recommend the experience just for anyone who's curious about what it's like.
Robbie, you have something to add?
Yeah, it was just on Callum's point. I think that the additional string to wine's bow is that it's fungible. Unlike classic cars or a piece of art, wine does have fungibility. Lafite, every vintage, make 30,000 cases, 40,000 cases, and correctly stored and in the correct condition, you can trade a case like for like. And that enables us and others to benchmark data across time. We can trade a case of Lafite 2005 today that we can say is in the same condition as a case that traded 10 years ago and 15 years ago. And so tracking that price over time for something that is so precise, I think that's what's unique about wine versus other collectibles, perhaps.
Nick, what's a common mistake a first-time wine auction bidder may make, and what advice do you have for them to avoid it?
So I think often people think that waiting and coming in at the end, which they might have done in the past successfully with online auctions, can achieve the best outcome. Actually, most auction houses are able to build in an anti-snipe function, and so last-minute bids within, let's say, the last 30 seconds simply extend the bidding period. So that strategy doesn't work. But I think that the other mistake that people make often is to get a little bit hooked, and maybe this was something Amanda was alluding to, a little bit hooked on the sheer adrenaline rush of raising your paddle. And then the auctioneer looks at you and everyone else in the room looks at you and you think, wow, I'm winning. This is great. And that starts to feed into all sorts of other things that are going on. And it's a really exciting feeling. And when you do win your first auction lot, it's a wonderful thing. And it's a great feeling. And people become addicted to it. And we see it happen again and again. But I do think that the most careful and frequent buyers at auction have a strategy. They've planned what they're looking to bid on. They have fallback scenarios if they're not able to win the lot that they're first looking at. And they're also looking across multiple auctions. So if they're not successful with an auction on a certain day at a certain point, they know they can go and find a wine elsewhere. And it goes to Robbie's point about fungibility. I think one of the things that we find that works particularly well at auction is when you have the rarest bottles that aren't found anywhere else. And rarity is one of the key elements that drives activity. And so we take various data points like measurements around the number of bids per lot, even the number of underbidders, the number of paddles per auction. And we know when we have rare bottles or completely unique bottles coming up, the level of interest is much stronger. And to take a case in point, we have an auction opening in Paris later this month with Lafite bottles from a member of the Rothschild family. And some of those date back to the 1870s, and they're lying at Lafite and they've never moved. Now, the Rarity, the Provenance, and the story behind them means that these are going to be completely unique. And we know that there will be very, very strong bidding in advance of the auction. And we're being contacted by people as soon as the news is broken saying, Can we get an inside track? Is there some information you can give us ahead of the sale opening? Of course, everybody is treated equally because the sale is open and everyone can bid. But there are people who want to at least make the decisions ahead of it, looking at bottle conditions, requesting photographs, and having everything else in terms of background information in advance of the sale. So professional or committed buyers ensure that they have all of the background information ahead of the sale.
Callum, is WineFi going to auction on behalf of investors on the platform?
So Nick has actually inadvertently teed me up very nicely for my answer to that question, which is, I think Nick's completely spot on. You know, those type of really rare, truly collector's item bottles, you know, are perfect for auction. We are often approached by individuals who have a portfolio, or actually more often than not have inherited a wine collection, and they want someone to take over the management of it. Our nightmare is really rare, illiquid, you know, large format bottles. You know, we saw an Imperial of Sassicaia recently, because we wouldn't place them within our own portfolios, because we need to be able to exit on behalf of our clients within a certain amount of time. And we need to do that in as low a cost way as possible. So, you know, I think where, you know, WineFi would go to auction, in theory, you know, if we were looking to sell something like that, but actually typically our portfolios are built to be more readily tradable. And, you know, to Robbie's point, you know, we would look at the more fungible wines where there are more data points in order to get an understanding of how those wines would perform in portfolios. So I think it's quite an interesting difference between how we would operate as a business and, you know, the kinds of wines specifically that Sotheby's would be looking for. Interestingly.
Amanda, your advice, it sounds like, have a spreadsheet, do your homework, try to eliminate some of the, I think, emotion from the buying decision, and maybe don't drink too much at the auction.
Well, I don't know. Maybe Nick would disagree with that, given that you know, it does tend to get you going and get those paddles higher. But yeah, I mean, I think, you know, as a buyer, yeah, the best thing you can do is be prepared, right? So we've sort of danced around this a little bit, but yeah, I mean, you requesting all the information ahead of time, or even better, you know, many auction houses allow you to go see the wines in person. So when I was, you know, going to auction houses in San Francisco, I would often go a few days before, and I would personally inspect the bottles. I would look at them with light, because ultimately, you know, when you're buying through auction, it's not Costco. You can't return it, right? You buy it, you own it, it's yours. So you want to do as much due diligence as you can. So yeah, you want to be prepared. You know, the spreadsheets are key. But also, I think, just going back to the semantics of what it's like on the buying side of things, I think the first thing that you really need to understand is what, you know, what is it that you're doing? You know, you're buying not just potentially one wine, you're buying every wine in that lot. And then also, I think this idea of what a buyer's premium that eventually leads to that hammer price is. So I think researching, and every auction house is going to be different. That's the other thing that maybe we haven't touched on, is researching what the buyer's premium is. So once that hammer price, which is that last paddle price that you bid on, once that goes up, there's going to be percentage added to that, plus, you know, whatever taxes, depending on where you're buying from. Then you have to account for shipping and how you're going to actually retrieve those bottles. So there's a lot of costs associated with buying at auction that aren't just the hammer price, that I think maybe people should take into account more than they already are. I think it's, you know, it's very exciting to see, you know, $200 for a bottle of Sassicaia. That's great. But in the end, it's really like $300 because you haven't factored all those things in.
Yeah, Robbie?
Sorry.
I didn't know if you were raising your hand.
No.
Okay, well, I think it's really interesting hearing.
I think Nick is.
Oh, Nick, go ahead.
I was just going to come back on Amanda's point. I think she's absolutely right. One of the things that is important when you're buying at auction is to understand the on costs, and to understand the implications of what you're actually committing to. I would just want to pick up on one point particularly, because I think policies vary from auction house to auction house. Of course, it's caveat emptor, so buyer beware when you're buying at auction. But I would make the point that at Sotheby's, we offer an authenticity guarantee, and so people are in a position to return bottles, particularly if there's any concern around a discrepancy that there might exist between the way it's been described, which is in a lot of detail, including pictures, and the bottle as it reaches people. It very rarely happens, but it's there as a guarantee for people. And I would make the point that I think that auction is a wonderful platform, but it is as good as the diligence of the house that you're buying from. And so on occasion, there have been, I think, assumptions around the auction being a place where some less scrupulous players have used to dump lower qualities bottles or bottles with poor provenance or problems. And that's been the case, unfortunately, in the past. It's given auction as a whole a bad reputation. But I think that what the thing to consider is the reputation of the house itself that you're dealing with. And there is no bottle and no case of wine that's more valuable than our reputation, and it's true of a number of the other leading houses. So I think in that respect, you can be assured that you are protected. But I would say that the bit that isn't clear to people sometimes is the commitment they're making when they raise the paddle. So Amanda's point is well made and valid. You need to know the on costs and you need to understand the full implications.
Great advice. Let's move on to segment 2.